Drop. Drop. Hello and welcome to the market update on Friday. This is the Friday wrap up live stream. I am your host, Landy, and this is brought to you by David Gockstein. We're going to take a look at Bitcoin, obviously, and we'll take a look at some traditional markets, oil, Dixie, all that kind of stuff, as well as, it's a live stream. So I'm going to be taking a look at the chat and, it's not the audience that I have is getting used to me actually live streaming. Typically, I just upload the videos, but did very well the past couple of weeks in terms of watches after the stream. So I appreciate you all sharing and liking and watching. But if you are here live, go ahead and jump in the chat. We can talk about a few things here and there. I will open this up after I get through the bulk of my analysis, kind of, and my outlook and thoughts on the markets right now, and kind of move into seeing what it is that you guys are looking at as well. Although, you know, most of this has been kind of the watching of the recorded version of the live stream later. So, but I do appreciate those of you who do show up here live. Um, I'm probably over time going to be doing a little bit more live versus recorded, but we'll see how things go here in the future. And it's a little bit of a different time. It's 8 p.m. Eastern on the East Coast of the United States, and it is 5 p.m. Pacific Standard Time over here by me. The daily did just close for cryptocurrency markets. So Bitcoin got its daily close. We're going to take a look at that. Um, and, a lot of this is going to be well worn territory for those of you that do tune into the um, the recorded videos Mondays and Wednesdays. So, you probably already know what I'm going to say, but we're tracking this. Bitcoin's kind of made the initial move towards the high side of the range here off of the lows, and now it's about that next move. And if we continue to see higher low structure remain intact, so here on the daily, you can see the Bitcoin did lose the basis band of the Bollinger Band set here, and I am checking the live stream just to make sure that as I move this around, um, to make sure that the actual screen is not a mess here, because if it is, it's gonna make me sad. I'll be a sad little puppet. It's not too bad. Looks okay. Not too bad. Um, let's jump into this. So let's turn on the support and resistance zones of interest for Bitcoin here, because we did get a move that I talked about on Wednesday, and that is a high put in to confirm this most recent move up to $67,000 or so, or just shy of it at 66,935. We did now see that come to fruition with what I was talking about on Wednesday, and that is painting an actual high side structure on a close. And subsequently getting the breakdown below $65,000. So we got essentially a close right on the $65,000 area, um, below the upper first here on the daily for the Thursday candle, and then a move down towards the basis band. So much of what I talked about on Wednesday has now played out, and now it's about seeing if the trend remains intact, because this zone is an important zone of interest, or an inflection point zone. In this case, to the bottom side, $62,500, where we did see the prior higher low come in on a nice spike down last Friday before the move up. On closes above $65,000 here, we saw the move to the most recent high side structure off the lows after sweeping 60K down here. So now what we need to pay attention to is which way Bitcoin resolves this compression on the daily, because we had a giant expansion down into these zones, kind of level by level, back through 70 to 72, nuked straight through the 68 to 69K area on the daily and lower term timeframes. It did try to hold up in this purple zone right here, headed down to our major area of interest here, 62 and a half to 65, swung it, got bought up, and then went right down for what was the $60,000 low side structure. And then eventually hit our targets down here to, 58 to 60. Swung it, came back up, and now has retested these highs. So now it's which way from here? Daily compression would resolve to the downside on close of our close price momentum breakdowns below $62,000. So, realistically, if we continue to see the move down, we see closes that do break the trend below $62,000. If it's not very quickly recovered, and of course, if we do see closes below the lower second, that would initiate expansion at minimum to these swings below the 62 and a half region, somewhere around the 61 to 61 and a half area down here by the swings. Realistically, if we get close over close price momentum and expansion below 62 and a half, and that lower second standard deviation, which is going to start to work its way up to come in line with 62 and a half here, provided Bitcoin is trading around the basis band on dailies in terms of the closes. Then it would increase the chances of not just testing, 61, 61 and a half, but potentially back down to the lows, 58 to 60 being fair game. Anywhere below there, obviously, that would be expansion below the lows, looking for the mid to upper $50,000 regions, 54 to 56 down here by these weeklies. And then, of course, on the bottom side of this, there's two weeklies kind of stacked here. You got around 52 and a half to 54. Any kind of breakdown below there, looking down here to the next bigger area of interest, which is a weekly monthly zone of interest by the prior cycles bear market lower high structure at 48, 48.2. On spot, it was 48.240 exact for like Coinbase. In this case, 48 to 50. Also, of course, where we saw the ETF spike highs when it first launched to the big sell off at 38.5. So, it's a big area down there as well, 48 to 50. Anywhere below there, it's 45.5 or so on the monthly close open for that lower high from the previous bear market back in 22. Now, again, Bitcoin can still even initiate expansion, below 62 and a half and just tag the lows and try to hold them or swing them into, the 58 to 60 area, swing down below like it did to that 57,750 and then try to come back in. But realistically, close over close down there, you're looking at expansion from a compression on the daily, losing main supports and then down to the larger areas of interest. But even before then, we will get a good idea of what's going to be happening on the next expansion down. And, some scenarios to pay attention to, right? To the downside, and then I'll do upside scenarios to pay attention to. Obviously, if we get another higher low, great. Come down here, looking 58 to 60, yada, yada, yada. Right. That would be one thing to watch out for is continued higher low structure. We don't see any closes or breakdowns below the 62 and a half down there. Other thing to be aware of is any kind of, break of structure, lower high, lower low structure, right? On expansion down in to test those lows and potentially lower. So just watch carefully. We are, and I've been saying this for a while, like there was a nice shorter term time frame trade off of this 62 and a half last Friday over the previous weekend. Last weekend, we did get a higher low set in lower term timeframes, came down to retest on Monday. That was the real trade for the week to the upside. And then the rest has been the trade to the downside after, coming up and hitting essentially the key areas here. This lower high swing that painted the high up here at that 67.3 area. We had the lower high come in at that $67,000 zone. So pretty much bang on that high right there. And then it was back down. And looking at momentum, it is pointed down. We did touch the RSI's edge of bullish control zone there. So, you know, nothing that we haven't been looking for, nothing really out of character, no big extreme unexpected move or anything like that. So, and yeah, if you are in the chat, please go ahead and like and share this out there so others can come on in. I know that a lot are going to end up watching this after the fact, probably at the normal time that I upload videos, right around like the 9 p.m. Eastern, 6 p.m. Pacific. But if you can do me a favor, go ahead and like and share it out there with folks. That way, if they want to come in here and jump in the chat and ask any questions, they can. But yeah, nothing too crazy here. If we do see this break back out to the upside, obviously any kind of closes back above the upper second, right around 66.4, that then meet the conditions of trading above this most recent high at 67K. I would be looking at that 67.3 as being fair game up to the 68, 69K area, this purple zone overhead. And then on any expansion above there, I'd be looking for 70,500 at the weekly to the 72.2 area on the top side of that weekly zone. And then, of course, $2,000 at a time, 72 to essentially 74. This next area up here, 74.4 is going to be the monthly higher low swing, the last higher low that we had on the monthly time frame for a swing structure. and that's 74 to 76 essentially is what I'd be looking for up there. And I would take it 2 grand at a time if we do see things hold up well here. Hold the lows and then try to head further up, or do some consolidation to upside expansion on the daily from here. Um, I do like to go and check the 12-hour as it relates to the daily to give some indication of a reset, especially coming into the weekend. If we don't continue down and we do hold this zone on closes for 62 and a half, I would watch momentum over the weekend coming into the Monday session and pre-market, especially so when we see CME open on Sunday, pay close attention. There would be the opportunity for continuation drives of bullish divergence. And let's see where the edge of the bearish control zone is here. That would be 62.7. So, I mean, it could come down and even tag equal lows for that last higher low. I would beware of that area. This technically is a higher low structure with the swing kind of right where we've already swung at 63.7 or so. But I would give the 12-hour a little bit more room, as the daily wouldn't break structure until we saw any kind of closes below 62 and a half. Swings below would be the warning, below that 62 and a half. And especially on the 12-hour, that would be expansion mode already back to these lows, 61, 61 and a half, and then down to the actual 58 to 60 low side structure. So, and then of course, anywhere back above 65 now in the 12-hour, I would be looking at this as a low set. Equal lows essentially kind of out of the question for the close, but at least the swing would be in play, with the potential to head back up towards the most recent highs. So you can kind of get a bias for that on the 12-hour as it relates to the daily. Obviously, you get two 12-hour closes in the daily. So, you know, some of you are going to be down on the 4-hour chart as it relates to the 12-hour and daily. So it really kind of depends on what your view of it is. We do have a bunch of stacked, and I'm not, I don't typically pull order books, but as many of you know, when Nat, Bits, and Ash have been on here before, we have taken a look at the order books, and in that regard, there's a lot of bids down below price action, down near the actual lows, in that 58 to 60 and below into the mid and low 50s. And above price action here, we've got a bunch of stacked bids pretty much in line with like 68 to 70, 70 to 72. And then there's big blocks of orders overhead at 74, 76, so on and so forth, pretty much every $2,000. So pretty well in line with the higher term time frame swing structure and daily areas of interest. Now, of course, those are asks. And I would, by the way, if you're looking at any kind of order book platforms, filter by bids and asks so that you can get a clean view of where those resting orders are. There's a lot of liquidity building up down below. So, you know, less so to the upside. And I'm curious, actually, let's go ahead and I'm going to switch screens in just a second, doing some stuff in the background here. Curious where open interest is. Haven't looked at it on stream in a while. We're going to go to the daily, and then we'll take a look at funding rate as well. And I'm going to show you a free platform that many of you probably already know about. There's a bunch of paid platforms as well. Some people like CoinGlass. I like Coinalyze.net. I think that they have a pretty good mix of aggregation, right? And like very similar when looking at like open interest to something, or they give you the candlestick structure versus something like Glassnode and what's the other one? The one that I actually use, CryptoQuant. But let's go ahead and switch over here. Share this tab. So, off of the lows here, we had about $20 billion in open interest, and it's just kind of going sideways as price has gone up, sitting at 21,741,000,000. So, it's kind of what we would expect. And we're not seeing a bunch of open interest really tick up on this move up off of 57.7 to essentially a $10,000 move, right? To 67. We haven't seen open interest really move too much. So I'm curious what the funding rate is as we head into the weekend. So it is positive, and on the hourly, it did tick down a little bit. Let's look at the daily historicals. Yeah, yeah, as you'd expect, coming off of a low side structure, positive funding rate. So nothing really standing out here, to be quite honest. Long short ratio is probably going to be predominantly long, but it's actually a decent mix in and around this area. And that kind of reflects the kind of no man's land that Bitcoin is in this 62 and a half to $65,000 area. As soon as we get into this zone, it's kind of an inflection point. Um, you know, in terms of trend, break the trend to the downside and come out the bottom side of 62 and a half, and it's very highly likely we're going to see expansion to those lows. Doesn't mean that it can't just come down and then come right back up, but very highly likely that if we do see 62 and a half break down and we get that expansion, probably looking at more than that 61 to 61 and a half, to be quite honest, at least 60 would be fair game from the order book perspective, as well as support and resistance. So, and then really above 65, you can really wouldn't be crazy to see 68 to 70 in that prior, cycle all-time high. So, not anything too crazy, not anything too unexpected, man. I know I say it a lot, but we've been tracking price really well, really accurately. And I don't just mean, those of myself and those of you that follow me and follow my analysis. I brought on plenty of people here who have a completely different methodology than myself. That are coming up with very similar zones of interest. Now, I mentioned this last week. We did get a drive of bullish divergence finally confirmed on the weekly on a close. And see, here's the big thing. There's people out there who look at RSI and they're like, well, the swing was put in, so therefore higher RSI, lower low. It doesn't matter. It's not actionable unless you see the close. And we didn't get the close until last week's candle. Now we still are above the lower first standard deviation. And like I had mentioned, we need to see close over close price momentum that really can break out towards that 68 to 70 area and start reclaiming, you know, um, for this to be actionable towards, the for mean reversion back to the basis band. Now, I mentioned this earlier this week. I mentioned this last week, that if we did close the low, we could look for 68 to 70. That would be mean reversion to the basis, and then potentially, 2K at a time up to $76,000. That would be the upper first standard deviation away from the mean here, or the basis band, which is the 20 simple moving average on the weekly. That would be fair game to the upside. We need to see closing structure that can start to get back to that 68 to 70, which would be mean reversion to the basis band, and then start closing dailies above there to start targeting that upper first standard deviation. Now, at this particular moment on the weekly, this is now in a range. So we went from on the weeklies, we went from a big compression, a very tight squeeze at the highs, right? Compression at the highs, to a large expansion down with some mean reversion, even getting back to where the upper first standard deviation was, or in and around that area, for coming back down. So expansion through the lower second standard deviation, even lower third in this case. On the initial expansion, that's denoted by on the Landy bands indicator, which is free, by the way. It's I don't charge for any of this. So if you ever want to pick it up, it's in my bio on X. But the red arrow here indicates that that this candle off the initial expansion closed not just below the lower second standard deviation, which is a purple dot there, but it also closed below the lower third. Then the next candle continued that expansion. We got some mean reversion, and then we tested the expansion to the downside, rode that lower second standard deviation, mean revert back up, and then a retest of this lower second, coming from a new compression into a range. So now it's about range resolution on the weekly. range resolution would be a breakdown below, the most recent lows. So if we get a close below 57,750 and that lower second standard deviation, which by the way, we wouldn't necessarily resolve the compression or range compression here on the weekly if we hit $56,000, for instance. Like if we drop the most recent lows and just hit the 54, 56, we'd have to see closes below there, like 56 or so. That would get things set off for probably a price replace band in the next week down to that lower third standard deviation upon initial expansion, which would be targeting 48 to 50. So that would be what I'd be looking for on any downside move. And then back to the upside, pretty straightforward stuff. Any kind of a break above the upper second standard deviation, 82, 800, 82 and a half area, which of course, all we got to do is go out to the monthly and take that close open that was swung, right? That close open, higher low structure on the monthly. Take a look at that weekly. Oh, yeah, that's the upper second standard deviations. That would be a range break on expansion, price replace band to the upper third, 88 to $90,000. You'd need to see reclaims of this zone. Then, of course, a break above 98 to actually really get me excited about things. Um, but again, this is higher high to lower low structure. Typically, um, we don't see often. This is not typical of price action for Bitcoin. We have seen it before, but you typically don't move from trending structure where we get, the lower high, higher low, higher high, you know, um, lower low. This is all one move for me. I know that everybody's going to pick that swing, but you just typically don't get higher high again, right? Move from higher high to lower low to higher high. Typically, you don't see that on weeklies. Um, More likely it would be, you come down, look for something that does, like an upside move and then comes back down and tries to work its way out in a W fashion. Or obviously the other side of that would be, um, you know, just another lower high, lower low structure, right? That would be, something to kind of entertain and understand would be the two scenarios on the weekly. It'd be very, very, very out of character to see something like a higher high, like going from this higher high to this lower low to another higher high. That would be very, very out of character for Bitcoin. Although there are some folks that are projecting this. And look, there is some guys like I that I actually really respect a lot in this game. I know Tony's one of them, and there's a few others. For those that know Tony, if you don't know him, you should. Even if it doesn't matter if you agree with somebody or disagree. I saw like a lot of people last time he was on the Wolf Spaces were like, "Oh no, he's like totally wrong," and like just because he's got lower projections than what you do doesn't mean that you shouldn't entertain what he is saying as a potential scenario. Like he is drawing out like a larger pattern as a possibility, right? No one here actually knows what it would look like, but we have conditions that would be met that would start to paint that picture. But I would say it'd be very rare to start a range resolution on expansion to the upside, coming from a lower low to another higher high. Yeah, but there are some patterns that would fit. It would be a rare one for Bitcoin, and I think probably in a weekly, one of the first. And we've seen a lot of firsts in Bitcoin over, from the last bear market to bull market, and from this prior bull market to this bear market. Right? There's been a lot of firsts. We last bear market, first time we reclaimed a prior all-time high on the low side on the macro low structure of a bear market. We also made a brand new high prior to the all-time high that we had last time, which were always after the halving. We made a new all-time high before the halving, right? Um, so there's a lot of firsts that you got to entertain, but right now the conditions are very clear, right? We'll hit expansion anywhere below the lows and then meeting the additional criteria of closing. I would even give it room below $55,000. Why would I say $55,000? Because that's right around where the lower second standard deviation is on the monthly. 54 and a half to $55,000. So if you start seeing weeklies close below there, we're initiating, weekly expansion into the monthly lower second standard deviation. And you break down below there, looking for price replace band, eventually down to the lower third standard deviation, which is coming in basically right at 38 and a half. You can call it 38 and a half. It would be actually down to 35 as a zone. Those would be the extremes that I'd be looking at. So realistically, Bitcoin can play around the current area that it's in and even into the mid to low 50s. But if it starts closing in there, that's when we start initiating probably pretty severe downside targets. That's not my first case, by the way. I I know that many like people have asked me again and again and again. Excuse me for the coughing. It's been a long week. A lot of people have asked me again and again and again, like, "Oh, what's your worst case scenario projection?" And honestly, I could see a grind, an absolute grind, a horrible grind down to 45 and a half to 48 as a potential area. And then, at worst, I'd be looking 38 and a half to the close open structure around 42 as the institutional zone of interest here. That would be my take, like as the two biggest areas of interest for me. Look, coming down to $35,000, by the way, if you're already going to hit 38 and a half to 42, it's not out of the question. In fact, it's probably a high percentage chance to be looking at $35,000. Shout out to Nat, shout out to Tony, shout out to many others that have talked about that area of interest, right? But that is only going to happen if I see monthly expansion. And right now, that's going to be contingent on seeing the weekly expansion to the downside, right? And then not getting continuation of weekly expansion that results in that monthly expansion. I hope that makes sense for folks in the chat. Um, this isn't the late night Landy, I know. What's up, Bildo? It's great to see you. I freaking love Bildo. I see Milo in here as well. What's up, Finn? I cannot read the other name. Can I look at and review a token ticker? You are very good at trying to bait me. You're trying to bait me, and I know what you want me to look at. Just understand, Landy's in everything. All right. Your favorite ticker? Probably in it. Um, but yeah. So man, I miss Bildo. Bildo, where the hell have you been, man? Um, for those that don't know, had some spicy late night spaces for a couple of months. We had a good run of spicy late night spaces. They got a little unhinged late night with Landy spaces to the point where certain people really didn't want to be seen there, so they would only come in into the grease trap. So, which was pretty funny. Um, yep. All right, so let's go over and take a look at oil, right? In this case, oil hit the targets that we were talking about, including on the continuation extension that I called out. So when was this? Monday. I talked about after the close, right? We talked about this move to 84 to 86 and that we had hit it, right? I talked about, hey, look for the next move to be 88 to 90. We then on Wednesday hit that 88. It's above 88, but it basically hit our criteria, our line here, our our LARP line, our crayon drawing, our squiggly line. It hit it directly. Um, And then I'd mentioned, 88 to 90 is kind of the next play, but don't be surprised if we see continuation of expansion. And if we start to close above 90, it's fair game between 90 and 95. Well, we saw the move into 90 to 95 with the high here at 93.50, kind of splitting the difference there. 92.50 would have been exactly splitting the difference, but who's counting math and fractions and numbers and crayons, right? But we fulfilled the criteria to hit this main zone here, 90 to 95. If we do see that we get continuation, strong candidate for continuation would be on even any moves back down, any kind of relief to the downside, would be around that $84 per barrel. And even all the way, although it'd be right on the edge to the basis band, which is going to be more towards the $80 region coming into the Monday session. So realistically, this can drop all the way to 80 and it's still fine and preserves an upside look. It's below 80 is where it starts to look like it's going to come back down towards the low side structure back where we gap filled around the big monthly at that 68 to 70 zone. But if we get continuation and continuation of this particular move without any kind of, and especially strong, any kind of bounces or mean reversion back to retest 84 that hold up, or just continuation above 95, we got to look at 98 to 102 and a half, with the breaker being right around 99 to $100 a barrel. This upper third standard deviation on the daily is going to be at $100 a barrel. So you can call it at 98 to 102 and a half, with the $100 a barrel being the inflection point within that zone overhead. Anywhere above there, oh boy, we're probably looking like 110, 112 oil, to be quite honest, if we did see it above there. Weekly did get its initial rejection off the basis band, but did close above it. And of course, that is a very typical move. Run the bands to the top side on extremes and then come all the way back down towards the bottom side of the bands. And then come back to mean revert to test the basis. So now it's about, now that we have this downtrending structure, do we get a lower high and then come back down, right? Or does this continue back up to test the high side, 105, 107, all the way up to that 112, 110, 112 by the upper second? So that's what I'd be watching for. Strength of Dixie is going to play a role too. Obviously, the markets have been more reactive to Dixie, reclaiming that 101 level with this higher low on the weekly, with a higher high close. Oh boy. And the 102 region and the upper second is now clearly in view for the weekly on Dixie. So beware above 102. That's expansion up to price replace band around 103, 103.20 up here for Dixie. Look, if you want to see a more kind risk environment to risky assets, you want to see this below around the 135-cent region and preferably below $100 essentially on Dixie, which would put it below the basis. We would also put it below a really big important area at 99.57, 99.60. But yeah, if we continue to see strength in Dixie, I think that we're going to get what, we kind of been talking about, and that's a mean reversion, a little bit of mean reversion may be in play for markets here, but then an eventual correction or a larger correction. I was just kind of speculating based on the weekly here. I was looking at some criteria for a larger correction after the initial downside expansion to reflexive bounce to the, basically initial expansion to then run the bands to the top side, topping structure, lower high in place, drop the low at like 715, 716. And then that's likely going to result in a move down to around 680, 685 by the lower first on the weekly. That'd be around a 10% drop. Looking for more, obviously daily's retesting down, 695, 700 points for SPY here. But any further than that, and I would be looking for a larger correction, 15 would bring us down to around 640 to 645 by the lower second. And then right back to those lows. And realistically, you wouldn't want to see that structurally for longer term timeframes. That would look really, really, really bad, especially coming into monthly closes. But, we'll see how things hold up at the highs for SPY, NASDAQ, so on and so forth. Um, right now, it's doing exactly what I talked about when price got up here, right? When we had the initial drop down to 720, 722 area, right? When we got this gap fill right here with this lower low structure, I was saying beware of lower high consolidation if we don't get an immediate breakdown to go back and retest like 695, 700. Well, we got the buyback, we got the bear bait with the higher close as it related to the actual area that we were looking at structurally. And then it's just been, a little bit of a short uptrend, can't break about above that 756 or so, 756, 50, 60 area, and then sideways at the highs, and then a trend break back to the downside, trending down anywhere below 634, 635, 634. We're looking probably expansion down to 630, 628. And then, 620, 625 is going to be the area to pay attention to, right around this gap fill, this low. Anywhere below there, we're looking for expansion down to low 715, 716 low, to be quite frank, it would be in play. And then it's all about 710 down to 702, 700, 695 really is digging into the highs over here. And only on consistent daily closes on expansion above the highs here, right? Not just getting above 756 and expanding back to the 760 high. We need to see 765 on a close over close basis, probably pushing like 765, 770 to really get this actually resolved to the upside, or else this is going to likely result in a consolidation to larger correction. Doesn't mean it's inevitable, but we've been talking about this consolidation to larger correction for quite some time. We'll see if we actually get it. The invalidation of that thesis would be closing above 756, pushing the highs at 760. But more importantly, you don't want to see just slightly new highs with bigger corrections in between. Those are consolidations and compressions that result in downside price action. We're now in that phase where we're probably going to start seeing this squeeze. So what you would want to see for squeezes that are going to result in an upside move, 756, 760 would be the initial like higher highs. Maybe it hits 765. You need to see price closes above the upper third, close over close expansion to actually kick off the next move to stave off a larger corrective consolidation to move down. So that's kind of where we are with SPY. The look isn't price structure in terms of the actual structure is not looking great for NASDAQ. I would keep an eye. We were looking for this gap fill. We pretty much got it. 28K really is in the cards here. Maybe even next week, maybe it starts to get down into the 27s. Look, if we start to see that, we're probably looking at the correction coming in and playing out through the first part of August. Like, I wouldn't be surprised, right? But beware of some of these areas, because if we do see a rebound in these areas coming in this next week, and in particular, what can you look for? If next week, if we start seeing closes above 29, 29.2 or so, well, that's a trend break, likely right back into the range to retest higher 29.8, 30K for NASDAQ, right? Then things get a little bit more interesting, but it's still a larger consolidation, right? On the daily. But it started to look like it wants to, go and test some further downside. That doesn't mean it's going to, though. There is the opportunity for it to save itself here, even swing down and try to save itself. Yeah, 28,344. You're going to get 28K likely bang on this Friday close on the open on Monday for the Monday session. 28K is probably going to be the momentum pivot. Plus, it's a gap fill area that we've been looking for. And it's either we see it close below and we get that continuation of downside expansion, which likely leads to a larger correction. Likely we see SPY doing much of the same. Or it's going to swing down and try to close back in. And it is about closes when considering volatility, expansion, and compression. So definitely something to pay attention to. We have been talking about this for a long time. Been talking about this consolidation, this compression at the highs. Be very, very aware of it resolving to the downside and the conditions for it to do so. Pivots at 28K for NASDAQ. If we see close it, we can see swings below there. We can see gap down and move up. It's about the closes. So closes below there, going to be closes to continue down. Doesn't mean that we're going to get a huge volatile move. We need to see NASDAQ getting expansion, and we would need to see SPY dropping the relative areas. So 28K would be continuation of expansion to the downside for NASDAQ. What would that look like? The structure is so shit over here on SPY. But realistically, expansion down to like 730. Honestly, you'd have to see this follow through with closes below 720. Which would already be in expansion, right? Daily would already be in expansion back to its structural lows here, but it's got a much tighter range to work with. So if we see 28K dropped in NASDAQ, you're likely seeing this push towards the 720, 715 swing low. And then if we break below there, that's where we're looking for that larger move to occur on NASDAQ and SPY, obviously in tandem, lots of mix across the two. Anyway, let's go take a look at Dow. Dow is right at its lower second standard deviation. Talked about this last week into this week. We have now hit that 51.5 area on the swing low or so, just slightly above 51.5, right? It is going to be about below 51.3 now. That would initiate expansion to 50,500 or so and below to 50K and this structure over here. So to stave that off, look for closes back above. And that doesn't mean like I'm looking for brand new all-time highs, but to stave that off, you want to see closes back above 52.5. So 52.5, that'll stave that off for the daily. Let's do the conditions for NASDAQ as well. It's market. It's market. 29.2. I would say you want it above the basis, but the base is going to move down to 29.2 coming into the Monday open. And then of course I would call it 750. Just call it 750 on closes for SPY, or 7,500 if you're looking at SPX. So, oh, what's up, Spiders? Shout out to Spiders. Haven't seen you in a little while, buddy. I hope you're doing okay. Again, I do appreciate everybody liking and sharing this out there for the live streams, especially. I know that people come in and predominantly looking for me for the recorded videos, typically at 9 p.m. Eastern, 6 p.m. Pacific, but Fridays it's 8 p.m. Eastern live stream into around 6 p.m. I'll have more guests coming on soon. I'd love to get Cade on here from Wolf Bitcoin. Love him. Love him. He's a great dude. And then of course, some of the other Wolf crew coming in. Milo, you should come on sometime and just and troll me with IWM. I'm able to look at IWM for you, by the way. Did you happen to catch the last video when Dow 50,000? I mean, look, it's looking like it could head that way. Oh, the stream looks like shit, man. I'm so sorry, guys. Oh no. Is the August-September correction being front run? Look, maybe we get larger, maybe we get corrections, like smaller corrections, 5-6%, maybe even a 7% before we get larger corrections later. It really just depends on, I think this next week is going to be this next week would be the week of moving into August. So it would kind of be right on time, Finn. IWM, Milo. I know that we got a bit of delay here. Did you see my take on it? Wednesday's video, I believe. Let me come over to the chat and take a look. I'll let you catch up. But pretty much what I said on Wednesday, I think it was Wednesday, maybe it was Monday. But pretty much what I said, for anybody that's wondering what IWM, it's the iShares index fund. So it's Russell. It's Russell 2000. We have now broken below, but got a nice bounce off that lower second. So we did we didn't actually break this swing low that I was talking about the other day at 290. We broke it on lower term time frame closes, and now the criteria really is going to be it because it's walking the lower second down. It's really going to be closed below 288 to 290 is what I was talking about. You want to see closes that's going to resolve expansion to the downside, Mala. So if you're looking for, your 250s, right? If you're looking, honestly, I would be very careful around the mid 280s, to be honest, because of this high side structure and then the closing consolidation above it before the correction. But if you're looking like 270s all the way down to like, 250s, like really massive corrections, um, yeah, I mean, this is where you'd want to see it come from. Because if you look at the weekly, big expansion, big correction, work its way down to like 260 would be fair game. 250 on any kind of close over close move up of that lower second standard deviation expansion moving into correction. You'd likely look at like 250, 260 on extremes um, as like massive support. But by the way, if Rut does that, obviously we're looking at very, very big volatile corrections. And SPY, NAS, and Dow as well, right? So we'll see it all in tandem. What's crazy? This is essentially equal highs. So this is essentially bearish divergence on these highs up here, but realistically 278 to 280 is where you have to look first around the basis, and that's only if we see closes below 288, and I'd be very, very careful around the mid 280s. And then, of course, criteria back to the upside, pretty easy. You see any kind of closes back above. I would want to get above this swing at 297, 298. You take it as a zone, 298 to 300 to the upside. So essentially 288 to the downside. You're going to resolve compression to downside expansion, testing probably in and around 280, maybe under into the 270s. That would open the door for the much larger correction, but be careful around the 280s if it does get there. So like on a short side trade, like that'd be my take profit one off of like a lower high structure. If you're in around, 295, if you're short from 295 or something, then, the lows you hedge a little bit, but your first, the lows where we are now, but first real big take profits would be around 280, 285, and then start, take profit around 275, 270, so on and so forth. But yeah, I mean, yeah, 270 on that swing to 267. Yeah. That would be quite brutal. But I'll probably be looking at that expansion kicking off in traditional markets that I was just talking about. Yeah. So what's up, Cosmic? Appreciate you. Have a good day too. Let's see. Is that an Omi circle? Oh, yes, it is. Oh yeah, VV fam. Everybody's been changing their names and then coming back on different accounts. And after getting like, I don't know what happened with X the other day, had a bunch of my friends, all of a sudden their accounts are gone and then they're back and they're still using the other accounts. I'm confused. I'm very confused. Somebody tell me what's going on. But yeah, I think I've run out of things to say about price action. I talk about price action all day, every day with most of you. And I gotta say, it's kind of boring right now. That's one of the reasons why everybody's getting excited about meme coins and other networks launching and everybody's just kind of going a little nuts. People are back to ripping packs on timeline here and chasing meme coins across different chains. Look, I'm not immune to it. I've been doing it too. So, um, kind of boring, but this is the boring period where you don't want to really go away. You also don't want to piss all your money away on garbage, especially if you're going to position any of the majors. I mean, for the rest of this summer into fall, and we are going to see either another leg down or macro low structure, whether it's here or lower, and obviously higher probability still in the lower camp as it stands right now for Bitcoin and most majors for the cryptocurrencies. Although, much like last cycle, Bitcoin took another leg down, right? From its 17 and a half low, went down to 15 and a half, right? After trending up for a little bit, but most of the majors actually held higher lows or equal lows for alts. So be interesting to see if Bitcoin does move and take another leg down if we see strength in alts like we did last cycle. Um, Especially now with the larger institutional players here. And maybe they start picking up. Well, and we see a little bit of a structural change like what we saw last time. So, but yeah, unless there's any questions, I might actually. What is my? Oh God, is your dash pay gonna pump? Are you kidding me? You kidding me, Milo? What are you into? What are you doing? This is straight up degeneracy. He's into all this degenerate stuff. Look at this. Let me find out that Milo's actually like one of the bigger degenerates. We just didn't know it because he's like, oh hey, I'm looking at these traditional market tickers that I'm into. But realistically, he's driving down to like the local store and he's buying all the Pokemon cards. So um he's gonna start doing like camera aimed at the desk. He's gonna be ripping packs on YouTube pretty soon. Guarantee it. You catch him on his new Twitch stream. He's gonna be playing Arc Raiders, ripping Pokemon cards, packs, and getting that goop. But yeah, I think that's gonna about wrap it up. I don't have really too much else to say, unless anybody's got anything that they'd like to ask. Outside of that, one of the things that I do actually want to check in. See, the problem is a weekend. I don't like weekends. I don't trust weekends. What percent spot BTC did you deploy at 60K? I mean, at like $60,000. You're talking about how much spot did I buy? Out of the layered bids, it was probably like, I have to go look at my spreadsheet and I can't show that on stream. So let me actually go look. So 60, I didn't get, by the way, I didn't get when it first spiked 60 a while back. I didn't get my fills for a spot. It missed my orders. The order book was moving too fast. So I ended up at like 62 and a half, I think is actually where I got those spot fills. On the most recent run below into the 58 to 60 area, I essentially got the rest of those fills that I originally wanted. Looking here, it is 12% of my spot fills that I plan to accumulate. By the way, I've never hit 100% fills on the way down, right? Just so this is actually a really good question. So because like I have bids all the way down to like $25,000, right? I've resting orders all the way down. I'm not looking for those all to get hit, right? Because what I'll do is, okay, so let's say that we got let's see. So let's say that we've got this move down. We've got our move down. By the way, I bought some spot at 80. Um, but I stopped once we got I didn't I filled maybe like 1% of what I wanted there. And that was just in case we went back to the highs from a longer term time frame. Yes, this was a massive trend break. Yes, I was looking for this to either recover or put in a lower high, put in the lower high. I actually sold that spot that I bought here when we started to fail and come around towards that close. I was also trading this entire move down, so I was already hedged. Most of that money was coming off of my trading stack, right? I trade to get cash to load up. By the way, so this is for everybody that I get asked this all the time. When I trade, no matter what Bitcoin price is, when I pull profits for that trade, half always goes to buying Bitcoin automatically. If it's not already an inverse pair, if it's an inverse pair, the other half goes to stables, right? But half of all of my trades in crypto, when they are closed and take profits are hit, half goes to buy Bitcoin no matter what the price is. I don't care. It does not matter to me. It doesn't matter what the cost base. I don't give a shit. Right. The other half goes to cash. And I do that all bull market and I do that all bear market for when I want to accumulate more Bitcoin. That is where I start using that to layer into my long-term holdings that go into cold storage. Now, I mentioned this at the time that we need to hold 80. If we start to see lower highs in the weekly, we're probably going to breach the monthly higher low structure, right? Because we had already dug into 82.5 on that spike to 80. We had already breached the close open higher low on the monthly. So let me get rid of this real quick. So on the monthly, when we went down here, right, you see the white line. We had already breached, and I said, this is not good for the bulls, right? We had already breached this close open. That's a violation of structure, right? Now, oh, well, we bounced off of it. So I bought a little bit of spot there, but I ended up selling that spot because it was very clear that it was going to go and test at least the 74, 75K area and likely, as I'd mentioned at the time, result in a lower low structure, which is what we got, right? We got the test, a little while later in the same month that we had the test at the highs at 98, which by the way was a retest of weekly structure that was a lower high, right? So you might remember this, when we had $98,000. You might remember that this was this weekly right here, right around 98. And if you want to draw some parallels in that area, some horizontal lines, you can. It was basically a front run. I was calling for 98. We got 98. Yay. We did it. So, and then we got, of course, got a direct retest. Look, Bitcoin's price action plays so beautifully on longer term timeframes. People just don't respect. People have very little respect for Bitcoin's game. Bitcoin's game is beautiful on longer term timeframes. All right, so let me get back to the point I was going to make. Sorry, Finn. But let's say that we got this. I got my fills in here, right? If we were to do something like this, and then this, right, and we get another higher low, I'll throw some more fills in there. Maybe I'll do another 5%, right? If we were to do something like what I had said is very, very rare, although it's something I believe Tony was talking about being a potential. But if we did something like this, I'm throwing like 10% in on the higher low, right? Trend break, but it's very rare to move. This would be a different technical structure for those that do corrective structures. And wave structure, like Elliott wave structure. For those folks, this would be, I think this would be an WX towards the end is what he was calling for, but I'd have to go look. I'm not an Elliott wave guy. But if we saw something like this, like 82.8 closed above, we get a higher low and it's confirmed higher low. Yeah, there's another 5%, 5 percenter. There you go. But more importantly, it's about monthly structure, right? If we were going to continue to come down and we hit some of these areas, right? Like let's do a different scenario that's maybe a little bit more in line with the stuff that I show you just to make it easier. So say we come down here, we continue, maybe we bounce a little bit higher and then we come down and then we start to, maybe bottom out and then start to equal low, higher low it and then start to break back to the upside. There's probably I'm already filling orders there, so I'm probably going to be at about 15-20%. I'm throwing an extra 5 to 10% on that low, that higher low structure. But more importantly, I'm not putting my chips down like in earnest, like going in on the low until we get, some sort of a shift on the macro for the monthly. So what would that look like from here? I'll give you the bullish scenario. What would that look like from here? We stave off downside expansion, compression to expansion, and the extreme low targets. Let's say that that was the case, right? It's not the base case. This is a closing low or low. So let's say we did something like this from the monthly. We got a higher high, higher low. And if it's on the monthly, I'll have been positioning on weeklies, but once we confirm that monthly, boom, I'm putting a substantial amount of powder in. I never go 100%. Never go 100% puppet. Probably be about 75% of that stack because you always get a hedge. Um, and then usually I take that and I start gambling with it all throughout the bull market. So don't take my advice. Just ask me questions about charts. Don't do what I do. But essentially I would be in on the higher low. And that's going to be the same even if this continues in downtrending structure, right? So we got the lower low, lower high, we go lower low, we go lower high, we go, equal low or sweep of the low, and then we come back up. It's, equal low, sweep of the low, I'm in, right? And already filling on the way down. So by the time I get out into the structural shift for the monthly, that's where, the majority of my cash has been deployed. I hope that makes sense. Um, so it is dynamic, but right now I have orders in, right? And I have them all the way down to the extremes. Those orders don't get hit, they get pulled. Any orders that are relevant in those local areas gets adjusted to the actual higher low structure or trend changing structure or character changing structure on the higher term time frame. Can track it on weeklies to confirm that monthly as front runs, but it's really about that monthly closing structure. For instance, in the prior bear market, we pumped off the lows, you know, and y'all can go back and look at my videos at the time. I was calling for this to hold, but I was looking at this as being a character change high or low right here. So from the monthly, I was looking at this as character change higher lows equal low structure, and I was going freaking balls to the walls with orders in here. Many were looking for retest lower. They were looking for still like 12, 10, 12K. This is a failed bear market rally. But when you look at this on the weeklies, Okay. Am I back? Damn, man. I just got done dirty by Restream. That was wild. All right. Well, that was awesome. Thanks, Restream. Completely kicked me out all of the way out. Like, have to log back in, enter your username, password, everything. Get into your delegate account, all of this other crap. Jeez, man. Oh boy, I was on a roll explaining something about the prior cycle, and then the screen went wild on one side, and I was like, "Did I just lose the entire stream?" And of course, that was the case. Um, but yeah, let me finish my thought on that, and then I guess I'll wrap it up because it seems as though Restream is not none too happy with me at the moment, wants to kick me out. So let's try to get this done as quickly as possible, right? Let's make sure I share the correct screen. Don't want to share that tab. People might be thinking funny stuff about me. Let's see. Let's share this one instead. All right. Um, there we go. I'm back, and the chart's back. Let's go ahead and talk about this for just for a moment because my contention at the time was, by the way, for this here, we had a structural change off the lows. So what we had was the big expansion down, right? So we had the big expansion down, we had mean reversion, we had the squeeze, and then we had a failed expansion. We did not get close over close price structure below the lower second standard deviation. We also hit one of my major targets at 15 to $16,000 there at 15 and a half or so. Then we went in lower high to higher low swing. And then we broke the downtrend on the weekly. And then we got a higher low, higher high structure, higher low, back into a compression. And what we did is we held these lows, and it was right here. I remember this weekly because I had people arguing with me pretty pretty vitriolic at the time too. It's nothing really changes in this space when it comes to analysts and price projections and stuff like that. But it was this weekly candle right here. So we were trending off of equal lows here, which I was looking for. We had a swing of this low. Some places it had equal lows and higher lows in this case for this low right here on the weekly. And then we had a little bit of a lower high paint, but then turned it around. And it was this weekly right here, $28,000 to whatever it was, like 30,000 or something. That weekly right there, I was like, boom, rest in and fully deployed. Now, granted, I was still got to remember on the downtrend, it was filling orders. They were stacked on the way down, but I had orders much lower, even though I wasn't necessarily projecting lower. I had orders much lower. I moved those orders up and into position here on the weekly in preparation for the monthly close because we were coming in towards the middle part of October. I felt that we were going to go hit 35K. We did. That was a breakout expansion on the weekly. And also that $35,000 is a major monthly close open. I was looking for the next bigger moves up, which was, 49 to 38 and a half. And you see that all I did was put in some of the areas that were from the prior structure, right? That are still relevant even in the current price action, right? If we do hit expansion on like a monthly time frame. So I hope that kind of makes my thesis clear. Essentially, all those orders that didn't get hit, that I was not planning for them to get hit, but are there anyway, just in case I am wrong, they got pulled, they got put in on that candle. And I was already probably 50% in from my cash position that I had sitting on the side. And that probably put me at around that 70 to 75%. You never go full 100% puppet. Gotta have some degen money, right? But yeah, I hope that makes sense. And I think that's where I'm going to wrap things up. Been going about an hour here, a little bit longer that the stream started because there's the pre-roll while I get things set up back here. Had a little bit of fun getting kicked off the stream and then come back on the stream. So I think it's probably time for me to wrap it up and go have myself a relaxing weekend. I want to thank all of you who do like and share this stuff out there. Please like and share it, even if you're just coming in near the end of this particular stream, as of course you can watch it back later. No biggie. Just watch it back later. You can skip through, you can 2x because I talk too slow and like all that kind of stuff. And you can observe a squiggly line crayon eating and crayon drawing puppet master at work. All right. And yeah, much love to you all. I really do appreciate all the support. And I will be back here, of course, on Monday with the Macro Monday video. I will be obviously promoting this live stream, recorded version of the live stream over the weekend as well. For those that haven't watched it or haven't seen it, it is a Friday after all. People are out doing stuff, eating dinner, having fun, while I stare at charts and then go have dinner and have fun. And then I'm gonna probably be on David's show, The Breakdown, next week, every day at 12 p.m. Eastern Standard Time. And then, of course, Wolf Bitcoin, you'll find me on the stage over there for just about every show. I try to hop on if I can. And then ATC next week, although maybe it's not next week, it might be the week after. I might miss one of the days the week after, but you can look forward to ATC next week as well, Monday through Thursday. So I will see you all there. And I hope you all have a wonderful weekend. And of course, as always, a wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe. And of course, as always, stay safe. With all of that being said, Landy out. Take care.